Hello everyone, I'm Anthony with Numbers Speak. We're going to be talking about the two financial statements that everyone should know today. Look at some real life examples. So let's get into it. The first one is the income statement. The income statement is over a time period. So you might be looking at a day, month, quarter, year. So know how long that you're looking at. And it has your revenue and your expenses. Revenue minus expenses give you your net income, and hopefully you have a positive number at the bottom because you want to be making money. Next is the balance sheet. The balance sheet is a snapshot or specific day, and it has assets, liabilities, and equity. Assets are going to be cash, inventory, vehicles, and buildings. Liabilities are going to be people you have to pay and debts that you have. And then equity is if you cash out your business today, how much are you taking home? That formula is always going to be assets minus liabilities. All right, let's go take a look at some real life examples. So let's take a look at a real life example and a small business example here. And let's see what financial statements are telling us. So we're going to start off by looking at Apple here. And so this is just their public statements that they have to provide. It is their 10K. We see here at the top that this is an annual report. So we know annual meaning a year. We're looking at their yearly report here. And it is as of September 28th, 2024, meaning that their income statement is going to be wrapping around for 1 year up to the point of September 28th. And their balance sheet is also going to be as of September 28th. So let's go ahead and scroll on down. These large companies have a lot of information that they're required to put in with rules and regulations. And that is just being part of the laws that they need to comply with. So they need to tell a lot more detail. However, we're going to just take a look at a high level of their financial statements and how everyone has to do them. So when we go over to the financial statements, these large companies like to index things to make it easy to find because they want to make their users, the people reading them, to be happy, be able to find what they're looking for. So we can click on financial statements and then we just scroll on down and we're at the first statement that we're going to look at. The consolidated statements of operations. It's also known as the income statement. A lot of people use different terms for the same thing in accounting. So whenever you're working with someone, make sure that you're communicating and understanding what they're trying to tell you. It could be a client, it could be your parents and their small business, or your friend, and they might be saying the same exact thing as you, but just using a different term. Happens a lot. So we're taking a look. We start at the top and work our way down. We see in millions, meaning that the lowest number that we're looking at is $1 million. And then, we're gonna see over here that the years ended. We got the first column is 24, next column 23, last column 22. It's good to be able to compare those years that happened together. And then we're gonna take a look down here. We have our net sales, $391 billion in sales. That's a lot of sales. And then we see that their cost of producing those phones and other technology is costing them about $210 billion. So their gross margin, their top line is $180 billion. And then we have more expenses down here. We see that their research and development, their advertising, their other expenses in the background are costing them about $57 billion. And that leaves over an operating income of $123 billion. We still have a few more expenses and other revenue and expenses to look at. Other income and expenses are small things that are not your day-to-day operations, but they still happen. A lot of things happen in the world, and not always are they part of your regular business. So they have $269 million of other income. This has nothing to do with their day-to-day operations, but you still have to look at it as a business. And then that leaves a income before taxes, $123 billion. And then down here, they have to pay $29 billion in taxes. So they pay $29 billion in taxes. And then at the very bottom is their net income, which is going to be $93 billion. So they made $93 billion total throughout the entire organization for the year. Then we're going to go ahead and scroll on down and take a look at their balance sheet. Their balance sheet is going to be just looking here, same thing, in millions. And it's also as of September 28th. So when we take a look, and we're going to just read down the line here. Don't overcomplicate things, and hopefully we'll get into some of these details later, but we'll see cash and cash equivalents. Don't overcomplicate that. That's cash readily available. They got $29 billion readily available as of year end on that specific day, September 28th, 2024. That's the balance sheet, a snapshot in time. Securities is just investments. Accounts receivable, people that need to pay them. Other receivables, so more people that need to pay them. Inventories, what they have in stock to sell. And then other assets, there's always, they're a big company, there's always things that are not going to be so easy to classify. So we have other assets, and this is high level here. And then non-current assets just means things that are not readily available to be made into cash. It's going to take a little bit more time and effort to make them into cash. So we have our marketable securities, more investments. So these things are probably not being sold on the stock market right now, readily available. Property, plant, and equipment, that's going to be your vehicles, buildings, machinery, all of those pieces together. And at the end of the day, total assets is $364 billion. They have a lot of assets. They're a big company. Makes sense. Then we're going to go over to liabilities. Current liabilities is just bills that they need to pay relatively soon. They have accounts payable, which is your main account that you're always looking at when you're paying your vendors. This is your turnover of 30 days, 20 days, whatever it may be. They need to pay $68 billion to a bunch of people. All right. And then we have other current liabilities. Again, they're a large company. Other's going to get used. It's going to be just kind of a catch-all. So they have $78 billion in that category. And then we have deferred revenue. Deferred revenue is money they haven't earned yet, so they can't recognize as revenue. We'll get into that in some video. And then we're looking at commercial paper and debt. We're just saying, hey, we have more bills that we need to pay. And then non-current liabilities, these are longer term loans, just like your home mortgage is usually not going to need to be paid within 30 days. It's going to be a couple of years, so we're taking these are long-term loans. And in total, they have $308 billion debt that they have to pay. So they have $364 billion in assets and then $308 billion in payable. They got to pay a lot of people. Makes sense. They're a large company. It all adds up to me. And then at the bottom here, it's going to be our equity. So these are going to be everything that these stockholders are owning. This is their equity in their business. So this is going to be, if they cashed out today, this is how much they would hand all of their stakeholders. So that's a very high level, look at what is a business doing. There's a whole bunch of other information in here. There's going to be a lot of risk exposures, a lot of other conversations and things that are happening at Apple that they have to disclose that are laws. But we just want to take a high level look. You can be a big company and you can have a whole bunch of debt. If you have a whole bunch of debt, you might be a little bit concerned as an owner. Might be a big company and you never make any money. Your expenses are always larger than your revenue. Same thing for small businesses. You might be a small business and you might make $5 million, but if you have $6 million in expenses, you lost $1 million. So these are just really simple things, and these are the numbers speaking, which is where the name comes from, saying, hey, we have to take a look at what is actually happening out there in the real world. So we have Tony Maloney here. He's a contractor. We're going to be taking a look at his mock-up of the business and say, okay, Is he making money? Is he losing money? Is he in a good spot financially? Is his balance sheet showing that he has too much debt? Maybe he doesn't have any cash available? Let's take a look. So, Tony Baloney here. We're taking a look. Profit and loss. Profit and loss is the same thing as an income statement. P&L. There are terms being used all the time that are trying to mess you up. If you don't understand that people use different words to mean the same thing in accounting, you have a hard time. Make sure you clarify with whoever you're talking with. Take a look and we see, okay, January to December 2024. Great. This is just a year income statement that we're looking at. And then we go on down here. He had a total of 1.1 in total jobs completed, 1.1 million. So that's a pretty small business, but not, too small. He's starting to get his feet off the ground. And we take a look down here. Salaries, wages, payroll tax, employee benefits, $920,000 in expenses. I don't know how much he's paying himself, but if he's in there, great. He might be paying himself $70,000, but he needs a bunch of guys out there working. And that's just part of running a business. Because now that he has $920,000, that's a large expense. Only 1.1 million, 920. Okay, so we see a large expense come out here. Luckily, his general administrative, only $33,000, not too much, okay. Utilities, $16,000, okay, great. Depreciation and interest expense, $146,000. And just for the sake of this, let's say those are all of his expenses. He has no other expenses. This is complete, accurate, no errors. So at the end of the day, he had 1.1 in expenses, 1.1 million expenses. And then we kind of just start looking past those numbers. And at the end of the day, he actually made $23,413. So his total revenue minus all of his expenses is $23,000. I need you to understand that when you're running your business, you can have sales of 2 million and have expenses of 2.1 million. It happens a lot. Please know what your revenue and expenses are, making sure that there is a margin for you to take home. All right, so next is let's take a look at his balance sheet. His balance sheet is going to show that he has, okay, December 31st, we're making sure to start at the top. Balance sheet, December 31st, this is a specific day in time. He's got 1.1 million in cash. Great, okay, he has a lot of cash available. We see that he owns some land, some buildings, some vehicles. Those are all right here. And then he has 1.1 in accounts payable. Fella, you gotta start paying your people. You gotta start paying your vendors. You need to be making sure that you're paying people because that means that it's gonna eat up a lot of his cash. You need to make sure you have cash available. You need to make sure you can make payroll when it's due. Make sure that you're starting to say, hey, is this actually debt? Is this 1.1 debt, long-term loan? Or is this stuff that's going to be due in 30 days? Because if it's due in 30 days, he needs to make sure that he is able to have cash available. So, next down here, well, he does break out his debt. He has 636. Okay, that's a lot of debt here. But it looks like that debt is all related to his fixed assets. So it looks like he actually does have $1.1 million that he needs to pay here soon. And it's coming up. All right. And then his total equity, if he cashed out his business today, he's going to take home $48,000. Now, if he put in $25,000 originally, you can see that in the opening equity balance, but he's going to have to pay up all of his debts before he's going to cash out this business. So his assets minus his liabilities is what his equity is. If he stopped doing business today, that's what he's taking home. So I'm hoping that this helped. It's a high level look at how you run a business, being able to say, hey, our revenue minus our expenses, hopefully they're larger and we have a net income. And our balance sheet is actually a way to say, hey, do we have cash? Do we have our assets? How many assets do we have? Do we have a lot of debt outstanding? If we have a lot of debt, we need to make sure that we pay it. And what's our take home at the end of the day? That's our equity. So super high level. Hopefully this helps, and I'll see you